and today we'll be talking about a very interesting topic on Binance, and that is the Binance Margin. In this video, I will introduce to you all you need to know about margin trading. Why is Binance Margin good for you? We'll talk about the diverse trading perks, which is one of the benefits why you need to trade the Binance Margin. We'll talk about the multi-assets collaterals. We'll talk about the cooling off periods. We'll talk about the insurance funds, and I will also give you a live demo on how you can use margin to trade and make profit. Talk about the concept of margin without establishing the concept of leverage. Now, what is leverage trading? Leverage trading is a trading approach that is used by traders in both traditional and crypto markets to maximize profits. A common type of leverage trading in crypto is margin trading, which involves putting up assets as collateral to increase purchasing power. I'm going to show you how the margin trading works with this intro. Now, you can use the margin trading features to amplify potential returns on long and short positions. However, leverage trading include margin trading, which involves high risk. So just as you're trying to amplify your profits, you're as well amplifying your risk. But in this video, I'm going to give you a guide how you can manage this risk accordingly. With the Binance margin trading, you will be able to access funds from the Binance exchange for use in your leverage trades. This I'm going to show you how you can borrow and how you can repay the funds borrowed while carrying out Binance leverage trading. Now, to get started, to access these features on Binance, first you have to ensure you are logged in and have the 2FA authentication enabled. Next, you navigate to the exchange buttons and you click on open margin account. That's for a completely new system, but here I have already opened the account and I'm not new to it. But if you're new, you'll be prompted to do all this. What you need to do next is to read carefully the margin account agreement and click on I have read and agree. Next, what you see in this page, if you look right here, you will see that next to this, your order type, just very close to this, your order book, is your risk level. And here you see you have the options to transfer and borrow assets. So in order to get started, the first thing you need to do is to transfer funds to your exchange wallet. How do you achieve this? To transfer these funds, you click on this arrow right here. You go straight to this place. And if you see, look right here, you see we have BTC and we have 3x. This implies that we can have 3 times the initial margin. So if my initial margin is, say, 2 BTC, then with the 3x, I can get more 3 times that's my initial margin for trades. So with this, you'll be able to trade and pay back the additional funds given the interest. You can also view your margin levels from your margin wallet, and this will help you to determine your risk. One thing to point out here is that if your margin level drops so low, you will get a margin call to either add or close your position to prevent liquidation. Say for instance, if your margin level drops so low to about 1.1%, then your account will be forced to liquidation. In order to repay the amount you've borrowed, you click on repay from this tab. You enter the amount plus the interest and you click repay. You can also transfer profits back to your exchange wallet by clicking on access, then click on the exchange button and you click on transfer. Now, why is Binance Margin good for you? With the margin trading, you can enter the market with a bigger position, which means bigger gains on successful trade as compared to just using your existing funds. So for every successful trades and with a reasonable leverage, then you can continue to maximize your profit. The margin trading allows you to enter position quickly without depositing more funds to acquire the same position. So what this does is that this allows you to save time and act quickly if you are timing the market. So if you have a situation of lower capitals, initial capital, with the available amounts you have, you can quickly open a position, taking advantage of the leverage, and you make high profit in returns. The second advantage is the multi-asset collateral, which I talked about at the start of this video. So the margin users are able to invest multiple assets as collateral to borrow and trade on using the leverage. So with this, you're just going to pay back with the interest. So your interest rate will be calculated. But if you're using the cost mode, you can access the multi-asset collateral. So instead of investing BTC only into a BTC-based margin trade, for instance, an investor can use their BTC and Ethereum or BUSD and so on to dominate their collateral. And this allows you as a trader to operate with more flexibility when opening trades. One other advantage is the cooling off periods. So if you have been trading consecutively and you need to take off time away from trading to avoid excessive trading, then you can temporarily suspend trading related activities for a specific period by activating the cooling off period. This function can be accessed from here. So if you're logged in, you just click on your wallet. You see this corner right here. We have more data. Then you can just click on it and you see your cooling off periods here and you can activate it. One other advantage is the insurance funds. So the margin has an insurance funds that protects users' account when their equity, that's the assets minus liability, is less than zero, or when the user is unable to repay debts due to lack of funds in the account. And lastly, one other advantage I would talk about is the diverse and multiple trading pairs. So margin trading allows you to choose from lots of trading pairs. So you can pick from here, impute your trading pairs and choose among these. You can pick whatever pairs I want. So you see that margin trading is very useful if you want to amplify your profits and manage your risk. A simple guide on how you do it is just to understand that when you click on these, then you can borrow, you can impute your assets. When you impute your assets, then you click on whatever X you want. So if I want 3X, 5X, I just pick the pairs and that will be 3 times for 5 times or whatever the case may be, my initial margin. When I click on this, then I'm good to go. If it comes time to repay, you can always repay this debt by imputing the assets and clicking on repay. I believe with this, you can be able to trade your margin and you can be able to maximize your profit. For any question, please leave in the description below and I'll be able to guide you and mentor you in this journey. I'm Antonio and thanks for watching.